Hey everyone, welcome to another episode of Trader DNA. Smart money is one of the best trading styles because it enables you to analyze any pair effortlessly and efficiently by precisely understanding what you're searching for on the chart. It enables you to seize incredible risk to reward ratios without overcomplicating things. In this video, we'll first delve into the fundamental concepts of smart money that you need to apply to the charts before making any trades. This involves identifying who is in control, determining optimal supply and demand areas for trading, understanding market structure concepts, and recognizing liquidity zones. Next, we'll provide a step-by-step explanation of 3 outstanding smart money trading setups, complete with their corresponding rules. Finally, we'll present several real chart examples to effectively apply these strategies to the market. So let's start with the basics of smart money concepts. Applying these concepts to the chart is our initial move before diving into the trading day. This overall analysis aids in identifying all the necessary elements to ready ourselves for executing trades. Firstly, determining who is in control is crucial. Recognizing market direction stands out as one of the paramount skills to hone in supply and demand trading. This is because we always aim to trade in alignment with the dominant side of the market. So, how does the system operate? First, it operates based on straightforward mitigations. Second, if the price mitigates at demand level, demand takes control over supply. Third, if the price mitigates a supply zone, supply takes control over demand. Imagine the price moving in an uptrend and making a series of higher highs and higher lows. Every time the price breaks the structure to the upside with inefficiency, a demand zone is created. The price hasn't tapped into these zones yet. So these demand areas remain unmitigated, providing a perfect opportunity to advance toward the dominant trend. However, breaking below this valid demand area is called a change of character and indicates 2 things. First, supply is taking control over demand. And second, a valid supply area has been formed. Then the price continues pushing down, creating supply areas until we reach the next unmitigated demand area in front of the price. Now after reaching this level we have a fight between supply and demand, and we witness 3 common scenarios in the market. In the first case, the market breaks the demand level, indicating a heavy bearish momentum. So if the market returns to the supply area, we could go short aligned with the dominant downtrend. On the contrary, if the market breaks the supply level to the upside, we have a change of character, indicating the short-term downtrend is over, and the price can continue pushing upwards. So we could go long at the demand areas aligned with the dominant uptrend. In the final scenario, we witness a period of consolidation and a ranging market between the 2 zones, in which breaking each one indicates who takes control. So let's see some real chart examples on this topic. Here on the 1-hour time frame of the British pounds-United States dollar pair, let's analyze market movements individually to pinpoint where supply and demand are in control. Starting from the left, we observe a structural breakdown to the downside, indicating that supply is in control as long as we remain below this swing high. Additionally, there is a sharp move to the downside, breaching the preceding market structure, reinforcing the dominance of supply. Once again, there is another structural break, defining a valid zone where supply maintains control as long as we stay below this zone. However, if the market breaks and closes above this supply zone, we witness a change of character, which shows that supply failed to push the market lower and demand took control. Because if supply were still in control, we would anticipate a rejection from this area, potentially leading to another break in market structure to the downside. Currently, demand is in control, and our objective is to trade in alignment with the prevailing direction. Then the market makes a sharp move to the upside with a clear inefficiency, leaving behind an extreme demand area. Subsequently, it continues its upward trajectory, forming additional demand zones for potential trading opportunities. Each of these demand areas represents a potential buying opportunity. The first demand area may reach our initial target, allowing us to at least break even before the market reverses and undergoes a change of character. However, this change of character is not deemed 100% valid. The rationale behind this lies in the presence of a clear inefficiency and a valid demand area just below it. This demand area could serve as a magnet for the price to fill the gap, capture liquidity, and persist in its upward movement. Now, let's shift our attention to the second setup we have. So, what are we looking at here? We have a valid demand area that holds the potential to act as a reversal point for the price to continue its upward momentum. There's a notable triple bottom, creating a well-defined liquidity zone, as many stop losses are positioned beneath it. This mirrors the scenario we previously discussed. A clear inefficiency exists, and there's a valid demand area right below the first one, which could function as a liquidity sweep. An important point to note is that we cannot control the market. However, we can position ourselves to be ready for various scenarios that may unfold. Order block indicator. You can manually analyze order blocks, which is excellent for honing your order block analysis skills. However, there's a drawback to this technique. It lacks speed. The only solution is to utilize the order block indicator. By employing this indicator, you can swiftly analyze across all markets and time frames. As seen in this chart, identifying order block positions becomes quick and effortless. So, if you want to implement the exact setup shown in this video, you can download all the templates and indicators in the description. I've included a template with the system that you can simply upload to your chart, and it will automatically plot the indicator perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. And now, let's continue our discussion. Let's proceed to our next topic. Smart money market structure. The market structure is a vital source of information, encompassing key levels, market direction, swing highs and lows, and potential trading opportunities. Let me walk you through some fundamental concepts about the smart money market structure. In an ideal uptrend, the market consistently forms higher highs and higher lows. Whenever the market breaks a structure to the upside, a demand level is automatically established. As long as we remain above the zone that triggered the break, demand controls the market, and the sentiment is bullish. However, a break and close below this level constitute a change of character, signaling a potential reversal. The same principle applies in a bearish scenario. Now, let me share some of our preferred smart money and price action patterns related to market structure and the psychology behind them. First and foremost, we have a valid order block and a potential trading opportunity to go long. However, upon examining the left side, we notice a gap between the candles, specifically beneath the first order block, and another valid order block zone. This gap acts as a magnet for the price to fill, restoring balance, grabbing liquidity below the first order block, and continuing its upward movement when it reaches the second one. Contrastingly, observe the second pattern. Here, we have a valid order block, and upon inspecting the left side, we see that this move has swept the liquidity under these equal lows, providing potential fuel for future movements. Therefore, when this pattern is formed, and we have an order block that captures liquidity under or above the equal lows and highs, it serves as a strong indication that the market may continue advancing. Third, let's delve into double tops and bottoms. Double tops and double bottoms stand out as some of the most effective price action reversal patterns that occur regularly. Essentially, they indicate that the market has struggled to breach the existing market structure and establish a new higher lower low. This can happen for various reasons, such as a loss of momentum, a shift in market structure, reaching key levels on higher time frames, and more. These patterns serve as an early indication that the short-term trend is concluding, signaling a potential reversal. Fourth, let's explore the concept of a fake out. A fake out, also known as a failed breakout, transpires when the price breaches a market structure level, but swiftly returns within the range. This occurrence signifies that the sellers were unable to drive the market lower, typically due to a loss of momentum. As smart money traders, we can recognize this move as a liquidity sweep. Both of these concepts suggest a possibility of a reversal in the market. Now, let's move on to the next concept. Liquidity zones. Liquidity zones represent areas where retail traders actively participate in the market. It's well known that multiple rejections serve as intriguing entry points for traditional traders, as many stop losses and liquidities are accumulated beneath them. Smart money's objective is to sweep through all the stop losses of retail traders, and our strategy is to enter the trade after these stop losses have been cleared. Having covered the essential fundamentals for general chart analysis, let me now walk you through 3 of the most effective smart money trading setups, step by step, along with all the associated rules. Now that you have a grasp of general chart analysis, understanding market direction, key levels, and potential trading opportunities, let's delve into 3 of the most effective smart money entry setups. In this section, we'll guide you step by step on how to enter the market and establish your stops and targets. Feel free to backtest and customize these strategies to align with your trading plan and personal style. First up, let's explore the basic order block entry. Order blocks represent optimized supply and demand areas. They materialize when we witness sharp moves in the market, causing inefficiencies and breaking the market structure. Traders define order block zones in various ways. Here's how we mark order blocks in different market scenarios. Typically, we designate the last candle that created the inefficiency as an order block, as we believe that crucial decisions are made during this candle. These order blocks can appear at the beginning, middle, or end of a substantial bearish or bullish movement. Sometimes, a consolidation area precedes significant moves, making it an ideal order block zone to explore trading opportunities on lower time frames. In such cases, we set our stops below the swing low, or opt to place orders in the middle of the order block zone for a more advantageous entry price. Now, let's dive into the first smart money trading strategy along with all the rules. This setup is a basic order block entry when it is aligned with certain market conditions. In the initial step, we search for a valid and recently created order block with evident inefficiencies and fair value gaps between the wicks that break the market structure. Subsequently, we place a buying order a spread size above the order block zone and position our stop below the swing low. Closing half of our position occurs when prices reach double our risk, ensuring that even if the price drops and triggers our stop loss, we break even. For the second target, we aim for the next key level ahead of the price. To make this strategy more effective and profitable, consider the following key points. First and foremost, trade this setup only when it aligns with the market direction. This strategy operates as a trend continuation setup, so execute it when the market direction is clear and you can identify who is in control. Trading with the direction of the dominant trend increases the likelihood of success. Secondly, assess the higher time frame key levels and determine the available room for price movement before reaching them. A small reaction at a higher time frame key level can signal a significant directional change in the lower time frames. When the price surpasses a higher time frame key level, there's a higher chance of witnessing a temporary reversal. Always check higher time frames to gauge the distance to these key levels. Thirdly, examine the left side of the structure. Before entering any trades, review the left side to avoid low-quality trades. For instance, if the order block is positioned within a liquidity zone, or if there are gaps and another order block precisely below, there's a higher risk of falling victim to a liquidity grab movement. The second trading strategy involves an order block entry pattern, coupled with a liquidity sweep. Examining the 5-minute chart of Euro-United States dollar, which displays an upward trend, the recent structure break to the upside has left behind an acceptable demand level. Many traders might consider going long if the price retraces to this area, with ample liquidity gathered below. Simultaneously, on the left side, we identify a distinct inefficiency and a well-placed order block zone. Institutions take advantage of this opportunity to secure the necessary liquidity, propelling the price higher when it reaches the order block demand zone. As described earlier, we set our buy limit a spread size above the order block and place our stop below it, tracking profits until it taps into a higher time frame supply level. The third trading setup is known as the order block in the order block trading strategy, and we employ 2 time frames to execute trades using this setup. First, we analyze the market direction and structure, marking our higher time frame order block zone. Second, we patiently await the price to return to the order block and then zoom into lower time frames. That wraps up this video. If you found this video helpful, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or X to show your support. See you next time.